The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon or good day wherever you happen to be in the country. My name is Elizabeth Ballerman. I'm the Secretary Treasurer of the National Union of Public and General Employees and your moderator for this session. Thank you for joining us for the second of our NUPGE 2017-18 pension webinar series. Just a couple of housekeeping items as people are still logging in. After the presentation, we're going to open the floor to questions for the webinar, and we ask that you type your questions in the control panel on the right of your screen as we go along, and specify if you have the question for a specific panelist. And at the end, then we will read those submitted questions for the panelists to respond to. We've scheduled 45 minutes for the webinar. The presentations are going to run around 30 minutes, and the remaining time will be set aside for our questions and discussions. So that opportunity will be there for you. The webinar is being recorded, and the video will be available to share with attendees, and will be available on the YouTube afterwards. So as I said, today is the second of our five webinar series that is designed for pension activists, advisory committee members, union officers, and trustees within NUPGE components, who all play a crucial role in securing and defending pensions for our members. The webinars are, however, open to members who aren't specifically activists or trustees, so anyone who's eager to learn, perhaps in preparation for one of those roles. The webinars are developed in partnership with Shareholder Association for Research and Education, with our thanks to Share, and their website link is in your webinar invite at share.ca/NUPGE webinars. And thanks to Tamara Herman, who is in the background helping us with technical issues. So about today's webinar, we have growing evidence that decent work practices are linked to company performance and long-term value. The evidence contributes to pension funds' efforts to better align workers' interests with the management of their deferred earnings. The webinar will begin by focusing on why investors are pushing companies to adhere to workers' rights and labor standards. And we'll then look at the tools and resources and initiatives that trustees and funds are drawing on. We have three presenters, and the first is Aaron Brenner. He is a senior analyst of the Capital Stewardship Program of the United Food and Commercial Workers International Union. The Capital Stewardship Program works with pension trustees in the union's efforts to protect the retirement security of the members and to promote corporate sustainability. A core part of the sustainability efforts is the engagement of corporations in relevant industries. And with that, over to you, Aaron, with our thanks.
Thank you very much, Elizabeth. I appreciate it. Good morning, everyone. Good afternoon. Thank you so much for having me today. It's a real pleasure to work with Share. They do amazing work, so I'm really pleased to be here. In the next couple of minutes, I'm going to try to do two things. First, I'm going to explain why investors should care about labor, in particular why they should care about how the companies they invest in treat their workers. And second, I'm going to give some examples of what investors, including pension funds, can do to incorporate labor concerns into their investment decisions, and I'll explain what that means. I'm going to start with a quote that everyone has heard corporate leaders utter many times, and that's the phrase, "Our employees are our greatest asset." Sorry, I need to advance the slide. So these two cartoons, and I'll give you a little chance to read them as I talk, demonstrate that there's widespread skepticism from workers that their CEOs actually believe that platitude, that employees are our greatest asset. And I don't need to explain to this audience how little corporate leaders demonstrate their belief in the importance of workers, let alone unions. Nor do I have to tell this audience that workers are important to company success. But the men and women who control investments often do need convincing. Rather than treating workers as assets to be developed, they see them as costs to be minimized. A recent example of this was at American Airlines, which announced that it would raise its the wages and benefits for its flight attendants and pilots, and in the aftermath of that announcement, its stock fell 5%. So as a result of this, corporate leaders treat their workers often as disposable costs to minimize. So, but contrary to the typical view on Bay Street, or if you come from the underdeveloped country where I live, Wall Street, there is compelling evidence that such cost cutting is self-destructive. Investment in labor does in fact bring returns to shareholders. I don't have time to go into all the studies, but this slide points to the conclusions of some of those studies. And I can give you one small example, also from the airline industry. The company JetBlue found that higher employee engagement, as measured by the willingness of workers to recommend that their friends work there, what they call Net Promoter Score, led to higher customer satisfaction, which led to increased customer loyalty, which led to higher revenue and profit. And they quantified this to show that a 5% increase in employee engagement led to a 1% increase in revenue. And furthermore, JetBlue found that employee engagement was mostly improved by manager quality. In other words, better managers meant happier workers, which meant higher revenue and profits. Now, that's not a shock to those of us on this call, but it's proof that how workers are managed plays a big role in how they, and thus their companies, perform. So if investing in labor leads to better corporate performance and higher returns to shareholders, what should investors, specifically pension funds, do? So this slide lists a number of actions that pension fund investors can take. They can adopt investment beliefs that commit them to consider seriously the risks and rewards associated with a company's labor policies, and CalPERS has done this. They can adopt responsible contractor policies. They can integrate ESG, including labor rights, into their investment analysis and decision making. They can engage companies through proxy voting and shareholder resolutions, and through directly communicating with management. These are all things that SHARE is expert in helping folks accomplish. But I want to talk a little bit today, just for the last few minutes that I have, on 4 collaborative initiatives. These are groups of investors seeking to improve their returns by taking into account labor-related concerns. And one of the things that these 4 initiatives have in common is that they are seeking greater disclosure from companies about their workforce practices and performance. So it's difficult for investors to make decisions without this kind of information. So all 4 of these groups are seeking greater disclosure by companies about their workforce. So the first one I'll talk briefly about is the Committee on Workers' Capital Guidelines for Evaluation of Workers' Human Rights and Labor Standards. You can see here that they have divided these standards into 10 different areas. Each area has a comprehensive set of key performance indicators about a company's workforce, and the CWC has been taking these guidelines to investors and analysts, suggesting that they ask companies to disclose their policies and performance on these key performance indicators. Pension funds can take these guidelines and they can encourage their asset managers to do the same thing. That is, to spread the word about these guidelines and about the information that analysts and asset managers should be asking of their investee companies. A similar initiative is the Workforce Disclosure Initiative. It's led by Share Action, a UK nonprofit shareholder advocacy group that's organized about 80 investors with $8 trillion in assets under management to sponsor a survey to 75 different companies, asking them for information about their workforce policies and practices. There, about 40 of the 75 have responded, and the WDI is collating that information now and should have a report later this month, and then a full, that would be a summary report later this month, and later this, early in 2018, we'll have a full report about the information gathered through that survey. The information that's being asked overlaps with some of the KPIs that the CWC is asking for in its guidelines. The nice thing about the WDI survey, as the CWC guidelines as well, both ask about not just the direct employees of a company, but also those workers in its supply chain. So pension funds can endorse and sign on to the WDI if they wish, and they can also encourage the companies that they invest in to answer the WDI survey, and they can ask their asset managers to do the same. The next collaborative initiative is the Principles for Responsible Investment. This is probably the largest collection of asset owners and asset managers devoted to responsible investment. There are some discussion about just what responsible investment means, but in general, the PRI signatories agree to consider environmental, social, and governance factors in their decisions, and that includes risks around labor rights and human rights. And the UNPRI organizes collaborative investor engagements with companies on ESG issues, such as corruption, water use, and labor rights in the supply chain. And I would encourage pension funds that are interested to explore participating in UNPRI and its activities. Having asset owners really helps drive that organization to consider workers. And finally, I'll talk about the Human Capital Management Coalition, which is a group of about 28 investors who are pursuing engagements with companies, trying to get those companies, mostly in the United States, to disclose more about their workforce. The Human Capital Management Coalition, I have to admit, I don't like the term human capital, but in the United States, it's used quite a bit and it's accepted. We can talk more about that in the question and answers. But I would encourage you to learn more about the Human Capital Management Coalition. I can talk more in detail during the question and answers, but I will leave it there. Thank you.
All right, thank you very much, Aaron. And the background noise just reminded us that Aaron joined us from New York City. Our next presenter is Shannon Rohan, who is the Director for Responsible Investment at Share. Her principal area of expertise is devising shareholder engagement approaches for mission-driven investors. Shannon spearheads Share's Valuing Decent Work program, which is mobilizing investors to advocate for robust decent work policies and practices by Canadian companies and to increase the visibility of decent work as an important investment consideration more broadly in capital markets. And she joins us today from San Diego. So over to you, Shannon. Thank you.
Thank you, Elizabeth. I'm actually in Quito right now in South America. So, but it is really a pleasure to be able to participate in this webinar and to talk a little bit about some of the work we have been doing in Canada to support investors in their efforts to integrate the consideration of labor and decent work issues into their investment and stewardship practices. I'm going to build somewhat on Aaron's comments and talk a little bit about the work that we've been doing specifically here in Canada. In terms of background, in 2016, Share joined together with the Atkinson Charitable Foundation and launched a project called Valuing Decent Work. And what we set out to do was to mobilize Canadian investors to advocate for better decent work policies and practices in investee companies. And we did that by demonstrating the importance of decent work for company performance, as Aaron outlined in his comments, the importance of decent work for long-term value creation, and also in building more sustainable, productive, and inclusive economies. We also wanted to increase the visibility of decent work as an investor issue and change the dominant narrative that treats workers exclusively as costs to be minimized rather than assets to be invested in. So that was what we have set out to do. We've been working on this project since 2016. And one of the things that we did this year was in October, we published an investor guide on decent work. And this guide was designed as a tool for trustees to help them incorporate decent work and labor considerations into the way that they govern their pension funds, into their investment policies, and also into their stewardship practices. The guide provides an overview of the investor case for decent work, drawing on some of the research and arguments that Aaron spoke about. And it also provides a step-by-step framework outlining ways that investors can address decent work in their fund governance, investment policies, and practices. And so on the screen here, you'll see a 7-step framework that the guide goes into more detail into each of these steps. And it really starts at the first step in terms of looking at ways that trustees might build support among their fellow trustees and pension fund staff. So, for example, it may be valuable to provide colleagues with evidence of the connection between corporate financial performance and their labor workplace policies and practices. So the guide provides links to academic research, and including a paper authored by Aaron that may be helpful for you to share with your colleagues. It also points in this first step to how opportunities may arrive at the board table to discuss decent work. So for example, in the process of hiring a new manager, that might be an opportunity to talk about what kinds of expectations you put in your request for proposals, for example, or what kinds of questions you might ask in the interview process. Another opportunity might be as you review your investment policies. There may be ways to insert a conversation about ESG issues broadly, as well as labor-related issues more specifically. The other steps that you see here, I'll go into some of these in more detail, but the second step is to integrate decent work into the fund governance structure. So that's really looking at investment beliefs, for example, your investment policies, whether you have a responsible investment, a standalone responsible investments policy. The third step outlined here is around integrating decent work into manager selection and oversight, and I'll go into a bit more detail into some ways you might think about doing that. The fourth step is using your voting rights and looking at opportunities or votes that have been on the ballots at companies that might relate to labor policies and practices, and see how your fund voted on that, whether you're giving your managers or your proxy voting service providers guidance on how to vote on those issues. The fifth is around engagement and opportunities to engage with companies in your portfolio on their labor practices and decent work practices, and I'll also go into a bit more detail in that step. The sixth step is looking at addressing decent work issues across asset classes, so not just looking at public equities. Certain asset classes have gotten more attention around decent work and labor practices, such as real estate, for example. Infrastructure is another example where we're seeing some pension funds developing responsible contractor policies, for example, that really outline expectations around how workers are treated, whether using unionized workforce, for example. So we're also seeing opportunities to think about this in different asset classes. And the seventh step that we outline in our guide is around sharing your experience. So really taking the opportunity to talk to other trustees, to other pension funds, to talk about the work that your fund has done, your experience as a trustee in talking about these issues and taking action around some of these issues. So we're very happy that Tim Hanna is on the call today to do just that. So I want to go into some of these steps in more detail and start with the governance level. So as you know, a clear governance framework gives trustees the foundation for effective decision-making and the ability to fulfill their duties. Embedding responsible investment into fund governance is an important step to support the consideration of environmental, social, and governance issues broadly. And we really see two key hallmarks of sound responsible investment governance, and those are investment beliefs and your investment policy documents or frameworks. In addition to developing broad investment beliefs about the nature of financial markets, for example, many investors are articulating beliefs related to the importance of ESG issues for investment returns and financial system health. Aaron mentioned CalPERS. They have a very good example of beliefs that talk specifically about labor issues. OPTrust also in their responsible investment principles talks about the importance of good labor relations. Another example from Australia, the local government super also has investment beliefs that talks about the importance of the well-being of members and a healthy environment and social cohesion for the long-term prosperity of the economy and essentially for the success of the pension fund. Again, you can see some examples of different investment beliefs in the guide. Investment policies are also a key governance document, as you know, which provide an overarching framework for the management of fund assets. We recommend that funds reference internationally accepted norms and standards in their responsible investment policies. So many pension funds in their investment policies or responsible investment policy will reference the International Labour Organization's fundamental conventions, for example. They might reference the United Nations Guiding Principles for Business and Human Rights, and that can provide a really important framework for which decent work can be considered in the investment process. The second step that I want to just talk a little bit more about is around monitoring your investment managers and some of the key questions that you can raise as part of your conversations with your investment manager as part of meetings. These are some of the questions that you might raise, and the purpose really is to move the conversation from simply whether or not they look at labor issues. So they can say, yes, we consider ESG issues in our investment processes, but actually moving into a conversation about how they actually do that. So these are some questions you might want to consider bringing forward with your investment managers. What kinds of performance metrics are they tracking? And these relate back to, for example, the CWC guidelines that Aaron mentioned. Are they looking at levels of employee retention? Are they looking at turnover, the number of training hours that the company is investing in on a worker level? And these are some of the metrics that you might see if your manager is tracking. Are they looking at any specific companies in relation to their performance around decent work? And if so, why? Has a red flag been raised around a specific company's practices? If so, are they talking to that company about those issues, and what are the outcomes of those discussions? And another important area that you can talk to your manager about if they're voting proxies on your behalf is whether or not there were any labor-related proposals on the proxy ballots of companies in your portfolio. And if so, how were those issues analyzed and how did they vote? We did see a growth of issues, particularly on the proxy ballots of US companies last year, related to social issues, related to human rights and labor rights. And we expect that those kinds of proposals will likely continue to increase in the coming years. So that's another point of entry where you might be able to bring up decent work around your proxy voting. I also wanted to talk a bit about engagement, and this is really emphasizing, I think, Aaron's comments on some of the collaborative initiatives that we're seeing around the workforce, where investors are coming together and really trying to get better information from companies on their labor policies and practices. And this is really one of the fundamental challenges that we face when we try to understand how companies are approaching their workforce, is we just aren't getting the information. But on the other side of that, we also hear from companies that investors aren't asking for this information. So recognizing sort of this supply and demand of information challenge, we've been working with investors in Canada and internationally to seek better corporate reporting in this area through our collaboration on a number of initiatives, one of those being the Workforce Disclosure Initiative that Aaron mentioned. Aaron went into this in detail, so I'll just skim over these slides. But just to say that SHARE is collaborating with the WDI in Canada, so we were able to reach out to 10 Canadian companies in the pilot year in 2017 to ask that they respond to the WDI survey. There were a total of 75 companies that we spoke to that were asked to respond to the survey. And 10 of those were Canadian. Also, just of the 92 investor signatories that we have to date, 20 of those are Canadian signatories. And so we're quite pleased to be participating on that. These are just some of the investor signatories, and I know my time is coming up, so I'm just going to jump ahead to my closing slide. I just wanted to give some additional resources and opportunities for you to be able to continue to explore labor rights issues in your investments. The link is there for you to download the Valuing Decent Work in Your Investments guide. You can certainly get in touch for more information about the WDI and the website I've provided there. SHARE will be hosting our 2018 BC Pension Leadership Forum on February 22nd in Vancouver, and we will have on the agenda there presentations also related to decent work, as well as just transition, for example, and other themes that you may be interested in hearing about. And finally, last step, just some of the research papers providing evidence of the business case. This might be something that you might want to share with your fellow board members and other pension fund staff to really help build the case for looking at decent work and why decent work is in fact an important investment issue. Thanks.
Okay, thank you so much, Shannon. Time is inexorably moving on. It's tough on an important issue. Our last presenter is Tim Hanna, who began his career with the Ontario Public Service as a correctional officer in 1990. For the last 10 years, he's been employed as a senior environmental officer with Ontario's Ministry of the Environment and Climate Change. He's been an activist with OPSU for more than 25 years, and Tim was appointed by the union to the Board of Trustees of the Ontario Public Service Employees Union Pension Plan, the OPTrust, in 2012, and he currently serves as its vice chair and the chair of their investment committee. So over to you, Tim.
Thank you very much. OPTrust is a mature pension plan. We're fully funded, and as at the end of 2016, we had $19 billion in assets under management. We have a broad asset mix holding significant investments in real estate, infrastructure, and private equity, and these assets are managed internally. We are member-driven. Our mission is paying pensions today and preserving pensions for tomorrow. As a pension delivery organization, we exist to serve our members. Everything we do is aligned with our members' interests. OPTrust has always had elements of what is now called responsible investing as part of its activities. OPTrust governance structure and joint trusteeship have contributed to responsible investing being part of the investment philosophy. The evolution of the formal responsible investing program has been more than 15 years in the making. The program explicitly acknowledges the relevance of ESG factors, leading to the sustainability of long-term investment performance. OPTrust recognizes that ESG factors can impact investment risk and returns. Our goal is to identify, assess, and manage ESG factors that support our mission to deliver sustainable pension security to our members. Our responsible investing approach is aligned to the United Nations supported Principles for Responsible Investment, to which OPTrust is a signatory. PRI provides a framework for mainstream investors' approach to responsible investing. Responsible investing is a core part of our investment strategy. Our responsible investing team reports directly to our Chief Investment Officer. Our responsible investing program applies across all asset classes. Our RI program has 4 pillars. First, governance. We have 2 board-approved policies, our Statement of Responsible Investing Principles and our proxy voting guidelines. Our Responsible Investing Committee is chaired by our CIO with key members from across the organization. Second, ESG integration. How the integration of these issues is incorporated into the investment decision-making and portfolio monitoring within each asset class. This is including infrastructure, real estate, and private equity. Third, active ownership. Active ownership at OPTrust is practiced through proxy voting, corporate engagement, public policy advocacy, and directly. We are able to have a direct impact at the private entities in which we invest. Often we have a seat on the board where our staff can directly influence the implementation of our RI approach. Engagement is the critical pillar to our approach, as we believe the best way to bring about change is to have a seat at the table and work with organizations to improve performance on ESG issues. And fourth, stakeholder engagement. Transparency and communication with our members, trustees, sponsors, and peers is very important. We produce an annual responsible investing report, and all of our policies are available on our website. The annual report is presented to the Board of Trustees every December, and at every investment committee throughout the year, we have a report provided by our Chief Investment Officer in regards to responsible investing. Recognizing the importance of an engaged workforce in the long-term success of firms, investors are eager to learn how companies are managing these issues. The investment case for decent work is based on 3 principles. A company's workforce is a fundamental asset and key to its long-term success. Poor employment and workplace practices are a source of reputational, operational, and other types of risk that can have financial consequences. Growing income inequality can lead to weak and unstable social and economic systems, and therefore negatively impact investment performance across portfolios over time. OPTrust has created the Statement of Responsible Investing Principles, SRIP, as a board-level policy with a commitment at the highest level to our responsible investing principles, which include the following labor components. 1, we make an explicit commitment to workers' rights as outlined in the International Labour Organization's, the ILO, principles. 2, we support and encourage participation by labor unions at companies in which OPTrust invests. And 3, we make a specific reference to the value of public services and the employees who deliver them. Our commitment to these principles is reflected in our investment decision-making process across all the asset classes we invest in. Most fundamentally, investment staff are expected to confirm the investments they bring forward are aligned with our responsible investing policy and that they have identified, considered, and mitigated all material risks, including those related to reputational matters and environmental, social, and governance factors. Our commitment is also evident in our approach to proxy voting, where we are guided by the international labor standards as well as those on human rights. We vote proxies at more than 1,500 companies per year and monitor our proxy voting advisor to ensure the execution of our votes is in line with OPTrust policies. The Responsible Investing Team is part of all new investment due diligence. They provide insight on key ESG issues to consider in the investment or strategy being considered. This is whether it's public or direct private investments. They also perform portfolio monitoring, including ESG analysis in public markets. When an issue arises, the Responsible Investing Team is included in discussion on remediation. The team also works on broader issues like climate change that impact a broader segment of the market. Climate change has multiple impacts over varying timeframes to most industries. Given the long time horizon, impact is difficult to assess at this stage. The following are some examples of how the investment team practices engagement around workers' rights. Historically, there has been a lot of discussion around governance and environmental issues, and this data is being quantified. There hasn't been much attention paid to the S in ESG, the social issues. In 2017, OPTrust signed on to the new Workforce Disclosure Initiative that we heard about earlier in the previous two presentations. This initiative was designed to encourage companies to disclose more information on their employment practices, as well as how this applies to their supply chains. Another example is an engagement conducted on collective bargaining rights. Collective bargaining is a powerful enabler to address issues of labor standards in supply chains. This engagement focused on companies in the clothing and food and retail sectors, which are known to depend on supply chains that extend into parts of the world where workers' rights may not be protected by law, or where there is protection, these laws may not be adequately enforced. Companies were encouraged to use their influence in their supplier relationships to have these partners implement effective collective worker rights within their supply chains by 1, actively supporting collective bargaining, 2, employing local teams in high-risk sourcing markets, 3, collaborating with other stakeholders, and then finally, by actively ensuring this was implemented. So there are some options for what other plans can do that aren't as well-funded as OPTrust is. We have our internal staff that manage a whole lot of this information. Some suggestions, begin with education of board members to determine a consensus view on responsible investing in ESG, and then enshrine this view in policy. In Ontario, Fisco requires plans to say what they are doing on their ESG in their statement of investment policies and procedures, and this document gets filed with the regulator. And then it's important that all trustees around the board table ask questions of everyone you work with on how and to show us the results. And that concludes my presentation.
Okay, thank you very much, Tim. So that brings us to the end of the formal presentations. We would certainly invite our participants to put questions to our presenters in the dialogue box and the chat box that's available to you. We've got a couple of questions that have come up as the presenters were, and one of them, quite frankly, is my own, and at the risk of displaying my limited knowledge. For Aaron, when you were talking for the Committee on Workers' Capital, one of the items on the list was social dialogue. I wonder if you could expand a little bit on what all is included. I presume it's a lot of the stuff we've been talking about, making sure that our pension funds that are looking after my pension aren't being made on the back of workers like at Rana Plaza, for example?
Sure. No, that's right. The Committee on Workers' Capital is a global network of pension trustees and capital stewards, union staff and pension trustees who come together to preserve workers' pensions and to make sure that they're invested responsibly. And the committee, one of the things that they did was put together these guidelines, and they use the term social dialogue because many of the people participating in the CWC, there are lots of European unions, and the European unions use this term social dialogue to cover what we might call freedom of association and collective bargaining, labor relations, because in addition to collective bargaining rights, freedom of association, in addition to that, in Europe, there are mechanisms, for example, in Germany or the Netherlands, where you would have industry bargaining. So does the company participate in industry bargaining? Or they would have representatives of the workers sitting on the board of directors, the supervisory board of the company. So the CWC has social dialogue is the catch-all phrase that covers freedom of association, collective bargaining, and those workers' voice on the job. So that's why that's what they mean by social dialogue, and they're asking companies to report on their participation in these various forms of collective bargaining.
Great, thank you very much for that. And another question for the two of you who are trustees on pension plans, maybe start with Tim, just to mix it up a little bit. How do you approach, as a trustee, your board with your board of trustees with regard to these labor issues? It may be that they're now so ingrained that this is a moot question, but is it ever controversial?
At our plan, it is very ingrained in all that we do. We have a very good responsible investing team that reports directly to the CIO. At the board table, we get reports regularly on issues. We're not down in the granular aspects, but in the reports that we get, it outlines all of those issues. We don't have an issue at the board table bringing up those topics, and they're well received even by the government appointed trustees and the union appointed trustees.
Great, thank you. And Aaron?
So I would say that this is a challenge. In the United States, we have the problem that many of our pension funds are governed 50% by employers and 50% by union representatives. So we have to convince the employers, many of whom are resistant to responsible investment approaches. I think what you're talking about is really an organizer job. It's something that we call capital stewardship here in the US, and these are union staffers who help to educate trustees and arm them with the information that they can use to convince their fellow trustees to support responsible investment policies. Share, obviously, in Canada, does yeoman's work in this area. There are also trustee networks like the Committee on Workers' Capital that can help trustees gain confidence, learn the issues, learn what materials are out there to help them make those arguments about why their board should adopt these kinds of policies.
Great, thank you very much. So I don't have any immediate questions up, but perhaps as we're getting just very close to our finishing, that's not a bad thing. Though if people have questions, please do submit them, and we may be able to get back to you later on. So we are going to be sending a recording of this webinar to all of you who have signed up for it, and thank you for joining us. The next webinars in the series will be pension plan design considerations, on January 24th of next year already. Then in March 7th, 2018, we are going to have trustee perspectives on facing the infrastructure challenge on pension boards. And the last of the 5 will be investing for impact. And of course, all of these topics are interrelated, generating financial returns with targeted social and environmental benefits. And that'll be on Wednesday, April 18th of 2018. So we encourage you to watch for those notices, to join us on those for those. And with that, I want to thank everyone here, our presenters today, Tamara at Share, Andrew McNeil here at NUPGE, who those folks have been doing the yeoman's work of getting these things organized for you. And again, thank you very much to our presenters. And with that, we will sign off. Thank you very much all, and best of the season.